Hey guys, it's Sasha. Palantir have just reported their Q2 results and they were a complete disaster. They were really not good, but then when you thought it couldn't get any worse as a Palantir shareholder, they had the earnings call. And this time around, they didn't do a live video feed like they used to, and the Palantir legal team gave Alex Karp a carefully worded script to read so that he didn't say something really bad. But then came the live questions, and Alex Karp absolutely lost it and went full Alex Karp, praising Palantir, saying how everyone else sucks so bad, saying how pretty much every other country that isn't the US sucks, and that, by the way, according to Alex, includes Europe, because Europe kind of sucks, and World War III is coming, and that is good for business if you're a Palantir or a Palantir shareholder, and I'm going to walk you through these results and share some of my insight from them, including Palantir deleting their commitment to grow by 30% per year, which is a big deal, and I will share my take on what that means for Palantir as a company, and in case you're wondering, it isn't good. I am currently a Palantir shareholder. I have a relatively small position in Palantir in my overall portfolio, but given these results, I am going to work on the numbers a little, and it is looking very likely before I do that I will stop being a Palantir shareholder once I've gone through the maths a little. Especially given where the market is today, I am seeing some astonishingly good opportunities elsewhere. Now, Palantir reported a revenue of $473 million for Q2. That is up 26% year on year and $3 million more than the $470 million that they guided for. So kind of good, right? And the second bullet point of this press release is where the problems really start for me, because it says US revenue grew 45% year on year to $290 million. It kind of sounds great. Grew 45%. That's amazing, except Palantir have never reported US revenue in these reports before as a separate item. You can see that last quarter, for example, they have reported, as they always did, the government revenue total, the majority of which was the US government. Then they reported commercial revenue as a total, and separately within the commercial, they reported what the US commercial revenue was as part of that. And now they have changed what they are reporting yet again because the numbers just aren't looking good, and they have to find something that doesn't stink. Now they have US revenue as the most important thing, and US government revenue. Those are the only two numbers that they have reported in here because, hey, don't look at anything else because it doesn't look quite so good. This is massaging of data. These are the only two numbers that they've got that don't kind of look bad. If you scroll all the way down to the appendix of their presentation, you can see these slides that used to be right at the top of the presentation before. So they got rid of them down to the appendix because they just don't look good. You can see that the government revenue growth is stagnating. Growth was 66% year on year in Q2 last year, then it was 34%, then 26%, then 16%, and now 13%. You'll probably agree the trend ain't looking too pretty. The US government was doing really well 2 to 3 years ago in terms of growth, but is not growing at all now. And the commercial revenue growth that was meant to explode also dipped from 54% down to 46%, but still is kind of good, right? So if you go and combine those two things, then suddenly the numbers kind of look good because you have the government revenue propping up the older numbers, you have the US commercial revenue propping up the newer numbers, and on average it looks great, which is why they keep repeating the same numbers throughout the presentation and throughout the shareholder letter. Palantir's sales in countries outside the US were a really big focus for their strategy for several quarters in a row, but at the moment their business outside the US is getting slashed, completely destroyed, and the US is pretty much the only bit still standing. So those numbers are the ones they're choosing to report, and they're portraying that as an intentional, deliberate strategy change. They're saying this is good. It is good that we are more concentrated on only working in the US. It is good that we're not doing business elsewhere. And by the way, even the US commercial revenue growth, which is performing very strongly, is showing signs of slowing down. It was at 120% growth year on year, which is lower than both of the last 2 quarters. And given commercial is still the smaller part of Palantir's business, this slowdown is a very important issue. The operational loss for Palantir was minus 9%, and the net loss was $179 million, a negative 38% margin. I wonder why they didn't print that net loss margin in this table, given they printed it for every other number. I'm guessing the internet just forgot to do it, an honest mistake. Anyway, here is the outlook. For Q3, Palantir is expecting revenue of $474 to $475 million. An extremely specific and super narrow range, which indicates they don't think that they will sell any new contracts this quarter that will materialize into actual revenue. So in Q3, they are expecting next to zero quarter-on-quarter growth. And at the top end, they're expecting a 21% year-on-year growth, so another quarter where the annual growth rate is going to decline. And talking of year-on-year, Palantir have deleted a line from their guidance that was always there before, because they always previously said that they will deliver 30% year-on-year growth in revenue for the next few years, and now this quarter's revenue grew by only 26%. They're projecting that next quarter's revenue will grow by 21%, according to their own projections, and their year-end target is $1.9 to $1.902 billion. How ridiculously specific is that? They are giving you guidance with a range of 0.1%. And that means that their year-end target now is only to grow by 23% year-on-year compared to the last year. So this is a very big departure and a very big step down. They are no longer guiding for 30% growth, and the numbers are declining. And talking of declining numbers, in Q3 and Q4 last year, Palantir made a song and dance about hiring a huge number of new sales staff that were going to transform the business, that were going to drive the sales pipeline. Those sales staff were going to absolutely explode the growth of the commercial arm of Palantir. On the last earnings call, they were saying they're still hiring them, they're getting a huge swathe of these new people coming through. So what do we have today? Absolutely nothing. Crickets. The growth forecast for the next 2 quarters just got massively slashed. And on this call, there was no mention at all, not once, anywhere, of the sales staff. Nothing, as if that whole thing didn't ever happen. In fact, Palantir spent a lot of their time dressing up the numbers to pretend that things are going well. They've been changing the graphs that they're showing. They've been showing numbers they've previously never shown and stop showing numbers that they previously did show. Don't look at what's happening with these numbers over there. Look at these ones that still kind of look good instead. Here, look, we grew by 41% on average since 2019, a really odd metric to just invent out of nowhere and show for the first time so that you don't have to focus on reality. The total outstanding deal value is $3.5 billion. Which is exactly the same as what it was last quarter, and it is lower than the quarter before that, and it was $3.4 billion a year ago. So this is Palantir's pipeline. It is not going anywhere. These are the deals that they have signed or have a chance of winning in the future that they haven't yet been able to collect in terms of revenues. So this is the indicator of what their future revenue, the future revenue of Palantir, is going to look like. And so for the last 3 quarters, that number, for the last 4 quarters really, has completely flatlined and actually decreased as of 3 quarters ago. So what that means is this: Palantir earned $473 million in the last quarter. And that $473 million will come out of the $3.5 billion outstanding deal value that they had 3 months ago. So their pipeline then only grew by the same amount that they made this quarter. Their pipeline for future revenue only grew by the amount that they earned in this quarter. This indicates a huge slowdown in revenue for the next few years. Because this has not just happened, this has been happening for 4 quarters running. During the quarter, Palantir added 27 new customers, which is good, but it is much lower than the 40 customers that they got in the Q1 update, despite apparently having all of these new sales staff. If you look through the financials, the stock-based compensation costs are roughly in the same place as 3 months ago at $146 million, and it kind of looks like, hey, it's dropped year on year, because a year ago it was $233 million. But a year ago, the share price of Palantir was $23, which was substantially more than double what it is today. So unfortunately, the shares are still being diluted more today than they were a year ago in an attempt to hire all this new sales staff that will win them more business, that will grow the business more quickly, but the business is not growing. In fact, the growth is slowing down instead. We are seeing no indication whatsoever in any of the numbers being presented or on the earnings call of where this new business is going to come through in the numbers. And then we did have that earnings call. After first being somewhat measured because he had to read off a script, Alex Karp went full bananas at the end. He started literally interrupting the questions that he didn't like and being quite rude in doing that, and then he refused to answer pretty much some of them, talking about something completely unrelated instead. There was one question on why Palantir removed that 30% year-on-year growth guidance, and Alex talked about a whole load of gibberish before saying he still thinks Palantir will make make $4.5 billion in 2025, which is just about 30% year-on-year growth from the $1.9 billion that they're forecasting for this year. But this year will be a drop on their 30% target. So on average, if you include this year and the next 3 years, Alex Karp himself is admitting that he doesn't think they're going to hit the 30%, even in his bull case. But the fact is, despite him saying that he believes they will do it, they still deleted it from the guidance. So on paper, it doesn't say it anymore. And the thing is, there was absolutely no explanation of how they might achieve it. Alex was literally physically banging the table with his fist. I am not joking here, saying that Palantir has no competition and Palantir is the best and absolutely nobody can ever replicate Palantir's products or business model.
The product is actually delivering value that is otherwise not available. The US government has tried everything not to buy our product. We had to sue the US government twice. Just imagine how popular I am.
Did you hear that? And this is a problem because the first step to a massive downfall is often the feeling of being completely invincible and far superior to everybody else. And then Alex went on a massive rant saying, look at Russia's war in Ukraine, look at China that's probably going to invade Taiwan, and all of that is going to be really good for us because we are a wartime company. That's a direct quote. And we're going to make a lot of money on the back of all of this. Before this call, I thought that Palantir's long-term goal and objective is to focus on enterprise customers, because they said that themselves. Help airlines repair their planes more quickly, more efficiently, before the parts fail, using data from all the different sensors that indicate the part is about to fail. That kind of thing. And now it seems that the only focus, based on all the conversation that was on the earnings call, is that Palantir is hoping that World War III is about to break out and the United States is going to send their tanks head-to-head into Taiwan to fight with the Chinese or maybe the Russians. And we as Palantir shareholders, I guess, will be jumping up and down with glee at how rich we're going to be as a result. At least that's the sort of vibe that Alex gave on the earnings call. If I take a big step back, here is what it's looking like for me. The US government will continue being a big customer for Palantir. They can't exactly switch, it will take a lot of time and effort and money, but the US government will not grow their spend with Palantir by 30 or 40% of Palantir's total revenue per year every year. So they're going to have to grow somewhere else. There are only so many US government departments who can become a customer. There's only one military. There are only so many police forces. But the only talk on the earnings call was about the US government stuff. Pretty much. The amount of money available in that pot is limited. Outside of the US government and outside of the US, in fact, Alex Karp just said that Europe is very slow at adopting technology, so Europe basically sucks. Everyone in the East collectively massively sucks or is an enemy of the United States and as a result of Palantir. And I think Alex doesn't even consider Africa or South America to even exist as far as Palantir's target market is concerned. So Palantir hoped that Foundry would become this amazing new product that every big company would obviously want and need to use, and they'll all queue up outside trying to go and buy it, but the sales just aren't happening. And after hiring a small army of marketeers to sell it, the sales are slowing down. The future pipeline for Palantir has been flat for the last 4 quarters with absolutely no discussion on the call as to how that is going to change. And that to me is a massive indicator that the 30% growth in year of revenue next year in 2024 and in 2025 is going to be extremely difficult to achieve, especially with the attitude that the company is portraying, saying, hey, it's definitely going to come, and it's going to come because we are better than everybody else. And they even said, what are the customers going to do? They have no choice. There's no competition. We're just so far ahead of everybody else. And that's why nobody's buying our products. As revenue has grown, the pipeline for Palantir is now less than 2 times of Palantir's annual revenue and declining. And given what we heard on the call today, I do not see a rational, smart commercial strategy for hitting the growth that Palantir needs to justify high valuations. So unfortunately for me, the prognosis is bleak. The level of arrogance is insane, not in a good way. And after the market sold off so hard this year, there are so many opportunities out there, so many other growth stocks that are growing, doing exceptionally well, where I don't have the same kind of reservations, and I just do not think that at the moment my money is working at its hardest being sat in Palantir stock. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.